Good morning and welcome to Almus Market Mornings, your daily dose of global financial updates. The big question market participants must be having is, will dollar have a 10-week win streak? By win, I mean closing every week higher than the previous week. We have had 9 consecutive win streaks for the dollar index, and now we are starting the 10th week. It's even more significant because this week we have a lot of events, rate decisions by four central banks: the Fed, the Swiss National Bank, the Bank of England, and the Bank of Japan. Moreover, their press conferences can cause good amount of volatility. Adding to some interesting stats, there has been only one occasion in the last 45 years where dollar index has strengthened for 10 consecutive weeks, and that was in 2014. Good morning, Pankaj. What do you think? Will we have a stronger dollar this week?
Hey, thanks, Swaraj. Uh, Very good, nice Monday morning. Uh, I would I would not speculate on that whether we will have a 10th weekly win on dollar index. Yeah, because there are multiple factors which will be playing during this week in the market. First, FOMC would be coming, then Bank of England, and then Bank of Japan. These three major central banks would be announcing their rate decision. The important point to look at is basically the SEP, Statement of Economic Projections of FOMC. What they highlight this time, whether they highlight higher rates for longer, whether they highlight higher rates for longer and then deeper cuts, market would be more looking at that point of time. Yes, technically dollar index look strong. It might extend its rally, but in a technical setups also we have seen after 9 or 10 consecutive wins, they kind of one small or two small corrections would be. So I won't speculate on that, but yes, in the current setup where the US interest rates, US inflation, and the US growth all looking like a Goldilocks scenario, so dollar index is getting some traction. Coming back to the main commentary, not too much of a frontline data on Friday. It was made up by China in the form of better industrial production and retail sales data. China industrial output grew by 4.5% in year on year, whereas there's a kind of some support measures which have been announced by the Chinese government is helping this recovery. We have seen a surprise rate cut by China last week, or basically on 15th September. And coming on top of several measures taken in past several weeks, authorities have established their seriousness to lift the economy out of run. While the stock market was already closed by the time the decision came, Chinese yuan turned out to be outperformer. Currently, Chinese yuan is trading at 7.2817, but we have seen a low of around 7.25. We have just seen USD yuan earlier in this week threaten to break into a new 15-year high, but it has been controlled by China. Now coming to the main market, where it's basically US stock ended sharply lower and treasury yields ended higher on Friday. Plunging cheap stocks and mixed economic data dampened investors' risk appetite, provided a downward a downward downward beat, ending to a kind of a volatile V. Uh, all three major US stock indexes closed deep red into territory, while NVIDIA, chip making stocks like NVIDIA has lost a good amount of money on that day. The S&P 500 and Nasdaq reversed their weekly advances, while the blue chip Dow ended the week nominally higher. Basically, S&P and 500 and Nasdaq actually got corrected during this week. On the economic front, data released on Friday was mixed, with import prices jumping, industrial production beating expectations, but University of Michigan consumer inflation expectations cooling. Both 1 and 5-year inflation expected were lower in this survey. On the India side, what is the more worrisome? It's basically oil prices continue to climb. They are notched their third weekly gain during this week. US crude, Timex crude closed at $91 per barrel, whereas the Brent settled at $94 per barrel. We have seen a good amount of a gold buying also around $1,900 on Thursday and Friday. Friday it closed at 1923. That's almost a percentage higher than the lower numbers. Our trade deficit number in India, trade deficit number printed at $24.1 billion, and that will keep a dollar rupee into check. So we are not expecting any kind of a recovery as of now in the rupee, and maybe what we will be seeing and watching would be where the RBI is coming in for the rupee to halt rupee depreciate. Today range we are expecting between 80 to 95 to 83.20. We are really entering into a very crucial FOMC week with all focus on the forecast, and then there is tomorrow is a holiday. So this week we are expecting a good amount of volatility. Let's see whether RBI is likely to come, whether RBI would be able to keep this week also dollar rupee in a range of 80 to 90, 83 to 20. That's all from me. Thanks a lot. Have a nice week.
Thank you, Pankaj. And of course, the key event this week is FOMC, and the statement of economic projections, as you mentioned, will be something to look out for. It gives us insight into what the Fed members are thinking and what kind of projections they are expecting. When it comes to China, China had a better industrial production data. Output grew in August. So economic situation seems to be improving somewhat in China. When it comes to oil prices extended above 94. Now it will be a key commodity to look out for, especially when Indian trade deficit is coming higher at $24.1 billion. This will keep the dollar demand high in India. That's it from us today. Tune in on Wednesday as we discuss the latest in the financial markets. Wish all of you a very happy Ganesh Chaturthi. We'll see you all on Wednesday. Thanks for listening.